Hi, so before sharing the solution with you, I have a question for you. Tell me, I have a business A. On that business, I have earned a profit of 5,000 rupees. Okay. And the tax that I have to pay is at the rate 30%. So tell me, what is the tax amount that I'll have to pay on this amount? So your answer would be, sir, 5,000 into 30%. So you have to pay a tax of 1,500 rupees. Correct? Now, let's say I have another business B where I incurred a loss of 5,000 rupees. Correct? Now, my consolidated income becomes what? 0, on which I don't have to pay any tax, versus what I was paying when I had only business A. At that point of time, I was paying a tax of 1,500 rupees. Because of this loss, I am doing a set off of my income, and because of which my total income becomes what? 0, and I don't have to pay any tax. So what's the net benefit that I'm getting out of this 5,000 rupees loss from business B? It is the savings and tax of 1,500 rupees. Right or wrong? So if your answer is correct, then I'll tell you this exam question was a damn easy question for you, because all you had to do was calculate the tax saving. So in this question, you have firm A, which is a profit making firm, which acquires firm B, which has got accumulated losses of 1,000 lakhs. So this is their firm A acquires firm B, and they have given you the projected profits before tax of firm A for the next 3 years. Now you have to determine the present value of the tax gain which firm A gains on account of merger with firm B, and the given corporate tax rate is what? 35%. The discount rate is also given, that's 12%, and the present value factor also they have given to you. So before going ahead with the present value factor and calculating the present value, let us just calculate what the benefit which firm A is going to get. So you see, in year you have 3 years. Okay, so year 1, year 2 and year 3. So your accumulated losses of firm B is what? 1,000. So first year 350 rupees will get set off. So you will be left with what? Balance of 650. So you have year 1, the net benefit which you are getting is of 350. Obviously everything is rupees in lakhs. Not to mention ICSI is very finicky about this part. If you don't write rupees in lakhs, don't expect any mercy from the institute. They're straight away going to give you 0. Now the second year, my profit would be what? 500 rupees, which I can easily set off with my this 650 rupees loss. So this gets set off. So second year I get a benefit of 500 rupees. Now I'm left with only what? 150. Now third year I get a profit of 700, but I have only 150 rupees loss to set off. So the tax benefit which I am going to get is only on this 150 rupees. However, these are my not tax saved, these are my profits which get set off. The tax benefit which I am going to get is at the rate 35%. So the tax benefit which I am going to get would be at the rate 35% of whatever profits I am saving here. So 350, 35%, 500, 35%, 150, 35%, which turns out to 122.5, 175, 52.5. Now we also have the present value factor of all these three for the 3 years. So the present value of tax benefit would be 122.5 into 0.893 plus 175 into 0.797 plus 52.5 into 0.712, and this is how you're going to get the present value of tax benefit due to merger. So this was a very simple question which was asked for 5 marks, and I hope you must have got this question right. Now stay tuned to my channel and don't forget to press the bell icon so that you stay updated with my all notifications and every video that I make. Happy learning. Thanks for listening. Bye bye.